Welcome to the Deep Dive, your shortcut to being well-informed. Today we're doing a fundamental analysis of a really polarizing name in tech, Quantum Computing Inc., or QUBT. We're focusing on the investment picture as of October 4th, 2025. QUBT closed at $24.62 that day. And, well, the big question we need to tackle for you is this. Is QUBT genuinely poised to become the NVIDIA of photonics, reshaping computing?
Or is this multi-billion-dollar valuation just, well, a speculative bubble built on maybe vaporware and hardly any revenue?
Exactly. That's the core conflict.
Yeah, we really need to cut through the noise here. There's a huge narrative war around this stock. I mean, you're looking at this almost unbelievable situation, a $3.73 billion market cap.
Huge.
Supported by only $373,000 in trailing 12-month revenue. So our job today is to filter that out, look at the core documents. What do they really say about the tech, the stability, the, frankly, massive risks?
Okay, sounds like a plan. So we split this into two parts. First up, the foundations. The business itself, who's running it, and the actual financial situation.
All right, let's start there.
So before jumping into the numbers, let's really nail down what QUBT actually does. Okay, Chapter 1, Business Analysis. The first thing you really need to grasp about QUBT is this huge strategic pivot they made.
Yeah, they weren't always a hardware company. They started out much lighter, capital-wise, a software provider with that catalyst optimization software.
Right.
But then June 2022, they bought QPhoton. And that acquisition, I mean, it completely changed the game for them. Overnight, they went from just software to a full-stack, capital-intensive company, all in on integrated photonics and quantum optics. It's a total transformation.
The really fundamental shift.
Absolutely. And that whole shift, it really hangs on their tech being different. Their main product uses this patent-pending method called entropy quantum computing, EQC. It uses nonlinear quantum optics.
Okay, so what's the key difference there for, the average person?
Well, the big thing is temperature. Most of the major quantum players out there, they need these incredibly expensive, complex cryogenic cooling systems.
Right.
We're talking temperatures near absolute zero.
Which sounds incredibly difficult and costly.
It is. And QUBT claims they avoid all that. Their core pitch is that EQC works efficiently at room temperature, using much less power. They're claiming like 80 to 95% less power than some cloud options.
Wow, that's a huge difference.
If that holds up at scale, it's a massive deal. It just knocks down a huge barrier to entry and operation.
That room temperature aspect seems absolutely central. And they're looking at two ways to make money, right?
That's right. Long term, it's about selling the quantum machines themselves, like the Direct 3. High risk, high reward, potentially. But maybe nearer term, there's potential from specialized foundry services.
Ah, the foundry. Let's talk about that.
Yeah, the foundry is the real tangible asset that's fueling a lot of the, let's say, bullish side of the story.
Yeah.
QCI built this US-based foundry for thin film lithium niobate, TFLN. It came online early 2025.
TFLN. Why is that material important?
It's really good for manipulating light at high speeds. Very efficient, which is, essential for photonics.
And the edge isn't just the material itself, it's the production scale.
Correct. QCI says they're the only U.S. company that can process 150 millimeter TFLN wafers.
Yeah.
And they're projecting, mind you, a potential capacity of maybe $180 million in sellable inventory a year from this facility.
That's a big number compared to their current revenue.
Oh, absolutely.
Yeah.
And this vertical integration, it's not just about supply chains. It also positions them nicely for U.S. government work, defense contracts, especially with the push to reshore critical tech.
Okay, but even with those projections, we have to come back to this. This disconnect in scale, right?
You do, because when you look at it now, that $3.73 billion valuation, it's all based on the future. Operationally, today, it's a small company, just over 50 employees, and pulling in that tiny $373,000 in TTM revenue.
It feels incredibly unbalanced, priced like a giant, but operating like a startup.
It's a classic narrative stock. And it's not just the tech story driving it. Market mechanics play a role, too. Getting included in the Russell 2000 to 3000 indices.
The index effect.
Exactly. That forces passive funds, think Vanguard, BlackRock, to buy the stock. It pushes up visibility, demand, kind of detached from the financial reality. And you have to remember, the quantum market itself, it's projected to grow massively short, like 41.8% CAGR by 2030. But the competition is fierce. Giants like IBM, Google, plus other pure plays like IonQ, D-Wave.
Intense landscape. Okay, so that lays out the business. Let's shift focus now to the leadership. Who's actually steering this ship? All right, Chapter 2. Management evaluation. Looking at the top, you've got kind of a blend. Dr. Yuping Hong, the CEO, he's the technical founder, inventor of the core IP. Seems like he brought in significant R&D funds from places like DARPA, NASA.
Right, the visionary.
Yeah.
And then you have Chris Roberts, a CFO and general counsel. He brings decades of finance and legal experience, about 39 years.
Seems like a decent mix on paper.
On paper, yes. But this leadership team, they are under some serious pressure right now, facing a really big test, a federal securities fraud class action lawsuit.
Ooh, that sounds serious. What's the claim?
Very serious. The allegation is that management made materially false and/or misleading statements, specifically between 2022 and 2025 about their tech capabilities and, interestingly, the actual scope of their relationship with NASA.
Wow, that hits right at credibility, doesn't it? I mean, if you're investing in QUBT, you're betting heavily on this team's execution.
Exactly. And if their statements are being challenged in federal court, that's a major hurdle for anyone feeling bullish.
Definitely a red flag.
And while dealing with that, they're also running this extremely high-burn growth strategy. QBT isn't funding itself with profits. There aren't any. It's all external capital. Operating expenses shot up to $10.2 million in Q2 2025. That's up 91% year over year.
A 91% increase in spending. Where's the money coming from?
Well, they've been successful raising it. They did a big $500 million private placement this year.
Yeah.
But this leads us to a really crucial point about their capital strategy.
Dissect.
Ah, yes, the cost of equity funding. A huge cost here. This approach, funding everything with new shares, resulted in a staggering 98.2% growth in shares outstanding just in the past year.
Right, nearly doubled the share count in 1 year.
Pretty much doubled it. Think about what that means. If you owned a share a year ago, your actual claim on any future profits or assets of this company, it's effectively been cut in half. That's the real, often hidden price tag for this kind of revolutionary growth funded purely by issuing stock.
That level of dilution is, well, shocking. And it leads us perfectly into the financial picture. Okay, Chapter 3. Financial analysis. Let's look at the key numbers. And this is where, the speculative nature just jumps out at you. Revenue first, it's minimal and kind of erratic. It was 0 in 2020 and 2021. Now, trailing 12 months, it's $373,000. But here's a big warning sign. Q2 2025 revenue was only $61,000. That's down 67% from the year before.
Yeah, not the direction you want to see. And profitability, well, there isn't any. They're deep, deep in the red. The TTM operating margin is, well, it's how do you even say it? Negative 12,474.90%.
Minus 12,000%.
Minus 12,474.9%. They are just fundamentally, profoundly unprofitable, burning cash consistently, negative free cash flow.
Okay, so bleeding cash, minimal revenue. Is there anything positive financially?
There is one major strength: liquidity. After those big capital raises, QUBT is sitting on a huge pile of cash. A real war chest.
How strong are we talking?
Exceptionally. Their current ratio is 88.17. That means they have $348.8 million in cash and equivalents.
Okay.
I guess only $4.0 million in current liabilities. So what this does is it buys them time, years potentially, of operational runway to try and get to commercialization without having to rush back to the markets for more cash immediately.
So they have breathing room, but the core business isn't generating anything yet.
Precisely. And that's why when you try to use normal valuation metrics, they just break down. The PE ratio.
Negative.
Meaningless.
Right.
And the price to sales ratio, the PS, that's where the disconnect really hits you.
Yeah.
It's over 11,000.
11,000 times sales.
11,000. For context, the broader tech industry, PS is around, what, 112, maybe? This valuation implies QUBT needs to achieve growth at a scale that's almost unheard of, just to justify where it's trading today.
It's almost impossible to rationalize that number based on current performance.
It is. And that's why doing something like a discounted cash flow, a DCF model, to find an intrinsic value becomes purely theoretical. You'd have to plug in such wildly optimistic, totally unproven assumptions about future growth.
Just guesses, really.
Pure speculation. And you'd end up with a value range so incredibly wide, maybe $5 a share on the low end, $35 on the high end, that it doesn't really tell you anything concrete, except that this is a binary bet. It's either going to work spectacularly or fail completely.
Okay, that stark picture brings us nicely to the second part of our analysis. We need to move beyond the company's own books and look at how the market is actually perceiving all this. All right, moving to Chapter 4, market sentiment. And the market seems just as confused as you might expect. Analyst ratings average out to a moderate buy, but look closer.
Yeah, the price targets tell the story. They are all over the place. The low target is $15, the high is $40.
That's a huge spread. What is that, like 167% difference between low and high?
Exactly. It just shows profound disagreement about what this thing is actually worth. And you see this tension playing out technically, too, between the bulls and the bears.
How so?
Well, on the bear side, you have very high conviction. Short interest is extremely elevated, somewhere between, say, 16.9% and 21.1% of the float.
That's a lot of people betting against it.
A significant amount, yes. These are concentrated bets that the company won't deliver. But
Right.
on the other hand,
The bulls are winning for now.
currently, yes, the bullish momentum is strong. Technically, the stock looks powerful. That $24.62 price, it's trading way above its moving averages, 47% above the 50-day, almost 86% above the 200-day.
Yeah.
That confirms a really strong momentum rally is underway, regardless of the fundamentals we just discussed.
So a technical picture completely divorced from the financial one.
Pretty much. And the stock is incredibly sensitive to news. It whipsaws around. You get positive catalysts, those big funding rounds, the index inclusion, any positive spin on the NASA relationship.
Right.
And they're constantly fighting against these really negative headwinds. The lawsuit, the dilution we talked about, and something we need to dig into next, insider selling.
Okay, let's look at who actually owns this company, and maybe more importantly, who's selling. Chapter 5, ownership structure. Institutionally, ownership is pretty significant, right? Around 30 to 35%.
And that includes those passive index funds, your BlackRocks and Vanguards, who kind of had to buy because of the index
Or
inclusion.
like forced buyers.
But it also includes active managers, the so-called smart money, who participated in those big private placements, $700 million worth. So that suggests, some sophisticated investors do actually buy into the long-term story.
That institutional backing does lend some credibility.
It does. But, and this is a huge but, we absolutely cannot ignore the massive red flag coming from insider activity.
Yeah.
Now, CEO Dr. Yuping Huang, he still holds over 11% of the company. That looks like alignment, right? Skin in the game.
Seems like.
However, look at the actual transactions over the last 6 to 12 months. It's been overwhelmingly negative.
Meaning selling.
Consistent, heavy selling. Dr. Huang himself, despite that large holding, sold 1.5 million shares. That netted him over $20 million in that period.
Wow.
And critically, there have been basically no open market purchases by insiders during that time. Zero buying to offset the selling.
That's not a great look. If the future's so bright at a $3.7 billion valuation, why are the insiders catching out millions?
That is the core contradiction, isn't it? It creates this real dissonance between the public story they're telling and what management is actually doing with their own shares.
Yeah.
It's maybe the biggest puzzle piece here.
Absolutely. Okay, let's try and pull all these threads together now. So Chapter 6, risk assessment. Let's do a quick SWOT summary for you. Strengths, weaknesses, opportunities, threats. Strength. You've got that proprietary room temperature EQC tech backed by 17 patents. You have that very strong cash position, nearly $350 million. And the US-based TFLN foundry, that vertical integration piece.
Right, those are the key bullet points.
Got that.
But the weaknesses and threats are just as significant. Negligible revenue, as we've hammered home, extremely high cash burn, that massive, massive dilution cutting shareholder equity basically in half in a year.
Don't forget the lawsuit.
Absolutely. Serious legal and credibility problems from that securities fraud suit.
Yeah.
And always the risk that a competitor, IBM, Google, someone else, comes up with better tech and makes theirs obsolete.
And there's a macroeconomic angle too, right?
And geopolitical?
Definitely. Geopolitically, the US-based foundry is a plus. The government wants critical tech made onshore, so that could be a tailwind for contracts.
But macroeconomically, that sky-high valuation makes QUBT incredibly sensitive to interest rates if rates go up.
It hurts companies whose profits are way off in the future.
Exactly. Higher rates crush the present value of those distant speculative cash flows. It puts pressure on the stock price, really regardless of their own progress.
So a lot of external factors impacting this beyond just their own execution. Okay, after sorting through all of that, what's the final takeaway? All right, Chapter 7, Conclusion. Fundamentally, the investment case for QUBT seems totally binary. You really have to pick a side.
Yeah, the bull case rests on that tech differentiation, the room temp photonics, the IP protection, the validation from big money raises and NASA ties, though that's now contested, and crucially, the cash runway they have to try and make it work.
And the bear case.
The bear case stares at a valuation that seems completely untethered from reality today. Persistent cash burn, incredible dilution, huge management credibility questions because of the lawsuit, and that glaring red flag of heavy insider selling.
So does the current price make sense?
Well, our analysis suggests that $24.62 price already bakes in a very optimistic future. There's really no margin of safety built in for things going wrong. Success looks binary. Either they achieve massive breakthroughs, generate hundreds of millions in profitable revenue, or this whole thing could end in, well, catastrophic failure for investors.
It really all boils down to execution then.
Completely. It hinges entirely on management proving they can actually transition. They're good at raising capital, getting patents, but can they build a real, profitable, tangible business? They haven't shown that yet.
And from a value investing standpoint,
From a traditional value perspective, the current price just doesn't offer enough compensation for the profound level of uncertainty here. The margin of safety just isn't there.
that's the comprehensive deep dive on quantum computing, Inc. Thanks so much for joining us. If you found this analysis helpful, please do like and subscribe to Stock Analytics AI. Just a reminder, our $4.99 a month members get priority requests for deep dives on specific tickers. We're planning to cover all the S&P 500 stocks over the next few months, and members get that exclusive priority access. Want a one-off deep dive? Just drop us a super thanks.
And the standard disclaimer. This deep dive was generated by an AI system. It's for educational purposes only. It should absolutely not be taken as financial advice. Please, always conduct your own thorough research or speak with a qualified financial advisor before making any investment decisions.